Good morning, business owners. Mike Bosman, your business savvy CPA, coming to you from Studio B, that's Studio Bosman Business Center. Of course, each and every Saturday, 60 minutes of action-packed business adventure. Today, no different. Maybe you've read on the wire that private equity is very active buying up businesses, gobs of businesses. And now I would say, in fairness, private equity, another word for venture capital, they became ostracized 20 years ago. So no more venture capitalists, just private equity. Anyway, we'll talk on that in a minute. But one of the things we do each and every Saturday is, bring things of interest to people that are interested in business. And a lot of our listenership aren't business owners, but they're trying to figure it out. So we just give them a path on, this is how business works, the ins, the outs, the good, the bad. We call it the good, the bad, the ugly, and try and make it interesting along the way. So if you're new to the show, I would ask that if you're out there as a listener on KOH in Reno, Nevada, I'd beg. In fact, it's just a different and better way to consume the show. Is maybe you listen to it on the radio. Always listen to KOH. It's a great way to get great content. In fact, before this show, the garden show, but after this show, the college professors all talking about business. And I think, this YouTube thing is a lot, it's hard to be interactive on this show. That if you want to be interactive on the show, just, pop a comment in our YouTube channel. Just go to at Bosma Business, or you can search Bosma on Business, at Bosma Business in YouTube, and you'll find us. And that way you can kind of have a spirited conversation along the way. One of the things that I'd really be interested to hear from our listeners is this private, or let's call it the change in the rules that Arizona started it with who needs to own a law firm. Now, in the past, the reality is only attorneys can own law firms. Only attorneys can practice law. And why did they do that? Because attorneys wanted to make all the money, and they controlled the laws. All the legislatures, and most of them are attorneys, so I get it. So they made the rules. It's only attorneys can do this stuff. Get it? Well, now there's maybe a lot of these attorneys are thinking, I just pay me my wage, and the entrepreneur's profit. I don't want to put the capital in. I don't want to think about it. I just want to practice law. And by the way, the one thing about being an attorney is, as you practice the profession of law, same with CPAs, right? As a practicing certified public accountant, if I mess up my client stuff, there's personal liability that comes to me. Okay, that's how that goes. And so, I commit malpractice, then it doesn't matter if I have any, I'm the one that committed malpractice, they're coming after me. That's why I have number one, that's why I'm really, really good. Don't make mistakes. Okay. 100% right, 100% of the time. But also we have malpractice insurance. So if you forget to dot an I and somebody's harmed, I get it. We're going to take care of it. Speaking of taking care of it, Webb Ralston is going to talk to us about all of these things. Now, Webb, first and foremost, welcome to Bosma Business. You're an attorney. I was looking for your business here. So, one day when I'm rich and successful, my producer will put the name of your business on the show sheet. So, Webb, welcome to Bosma Business.
Thank you, sir. Appreciate it.
What's your business?
So I'm a little bit of an entrepreneur. I've got a couple of law firms, a couple of title companies, and wellness clinic, and just some rental properties and various other things.
Okay. Because the practice of law isn't lucrative enough. You have to try other things. What gives, Webb? Or you're just a good idea away from another business?
I think I'm just a glutton for punishment. The practice of law has not necessarily ever really given me much allure right into the business of law. I think that kind of gets me fired up, and that's what I really like.
Okay, I get you. So now, of how you spend your time, how much is it, chasing the next deal versus practicing law?
Yeah, I'm more of a managing partner for our firms, and so most of my time is spent, growing the firm, strategic relationships, finding new acquisitions, and kind
doing
of
shows like this,
doing shows
getting
like
the
this.
word out.
That's right. So I do practice. I still like to handle our commercial clients, and I really enjoy talking to people. I enjoy helping people, and that gives me energy as well. But big picture, my big focus is on really growing the brands and the businesses.
Gotcha. So what's your businesses? What's the law firm, and how many employees? All that stuff. The kind of nuts and bolts.
Yeah, so we've really got two main firms now. The big one that we're focused on scaling is Arbor Legacy Lawyers. And that's an estate planning firm that we provide really more than just kind of documents. We're really after being your lawyer for life. So we're providing plans that work when you need them to. Team Title is another company of ours. That's basically a back end title servicing company for other title companies and that kind of stuff around. Those two go hand in hand. So how you're titling property, how you own property is, your assets, depends on, well, what happens to those after death. So that's kind of a natural conversation that occurs at the closing table. And then we've got another law firm that we just acquired, and we've kind of merged with another one of our firms called DeLorme, Hamilton, and Ralston, which is coming out of Georgia and the Carolinas, and it pretty much handles everything outside of estate planning.
All right. So why spin off the estate planning to the legacy attorneys?
Yeah, I think you kind of hit the nail on the head. There's some other states starting to open the door to non-attorneys coming in. And we could talk about it. There's a lot of barriers to entry on the law side, right? That's probably the biggest one, is becoming an attorney and going to take the exam and doing all the stuff.
Take the state bar, right?
Spending all the money and so, of course, private equity has now kind of found its way in 2020 in Arizona and Utah, although they took very kind of different routes to get there. But, traditionally, you'd also see folks, the attorneys are notoriously bad at marketing, right? It's just their name on the door, right? Or their names on the sign.
Like DeLorme, Hamilton, and Ralston?
That's right. That's exactly right.
So when DeLorme, Hamilton, and Ralston are no longer, like, I want to talk to DeLorme. I'm sorry, he's dead.
Yeah, that's right. That's right. It's she, and she is very much alive, and she is wonderful. Okay. But yeah, that's exactly right. And so, before it was kind of like maybe like real estate agents or maybe individual CPAs and stuff. It's like, what do you really have to pass on? Well, it's just kind of your goodwill, right? And there's not really a good outlet for that. And so you have all of these small town attorneys that do everything in these small towns, right? Mm-hmm. That are starting to retire and starting to go in their own direction. And there's not really a good outlet, for them to be able to kind of roll their practices into in some way, shape, or form. And of course, technology's made it a lot easier. We can do a lot now remote. We can watch a lot more remote, and we can kind of stitch these offices together. And as far as kind of Arbor's concerned, really it's to build a national brand, with estate planning and the idea of at some point in time exploring a partnership or, an exit with private equity from that brand.
Sure. Okay. So I got this question for you real quick, Webb, so let's say for fun that I want to create a trust. So, an irrevocable trust for the benefit of my son. So Arbor, like what states could they set that trust in? What states you registered to do business in?
Yeah, we currently, as far as where we practice in Tennessee, North Carolina, and Georgia. However, what we're also doing is we're licensing the Arbor brand in the process to attorneys in other states as well. And so if there's attorneys that are out there, they want to bring in estate planning into their practice, maybe they're real estate or they do other areas, then they can basically go through our certification program, become a certified Arbor legacy lawyer, use our process, our branding, and all the package.
So you're going to, okay, now I always figure out how to do this, and I'll just give you a little background. We just met, but we're doing something similar, not the same, something similar as far as, scaling across the United States. So, we hire CPAs. Wherever we find good CPAs, they're our newest best friends. But it's hard to know what they know. So we just started. And it was like with fear and trepidation, Webb, we said we're going to give people a competency test. And the way that we couched it was, we're not trying to blow you up. I just need to make sure that you've got this solid foundation. And if there's goals or if there's holes or these knowledge gaps there, maybe there's no reason you ever needed to I just need to know that so we can backfill that skills and training so that we know once you're a Keystone CPA, you kind of have this great foundation of tax technical. And then we're not out there worried that, you didn't know that pick a thing, qualified business income deduction. Know that you needed to juice your W-2 wages on your S Corp because you're always trying to lobby for less wages, more distributive share of income. You're like, oh, I actually have to go, or maybe your partnership. I saw this yesterday. Stuff drives me crazy. Saw this yesterday. Now Keystone's, we have CPAs, business brokers, wealth advisors, not attorneys, not yet, not till we can't. But it's interesting because I'm doing this deal on the business broker side. This guy comes in, I'm buying this restaurant. Restaurant's making $1 million a year. God bless him. and the two partners are taking out $900,000 a year in guaranteed payments. And I'm like, well, $900,000 times 20% is 400 or 900. I carry the 180,000 times 37%. I'm like, these two owners are voluntarily paying $60,000 more in tax than they need to, because they could take it out and distribute a share. What are you doing? Right? What are you doing? So, anywho, I was just, it makes me sad. It really, and that's why, like, making sure our Keystone CPAs, like, they know that game. Like, well, you can write that partnership agreement to have priority allocations, all this stuff. If you make it a guaranteed payment, I think it's code section 707C. Too bad, so sad. It is not qualified business income. Did actually lose that 20%. So, I'll get off my soapbox, Webb. I'm back. I'm back with you. Okay. So you're growing a national brand. How many attorneys do you currently have in the house?
Currently, across those 3 states, we currently have 5 attorneys, and those are actually all in-house. And then we're just now kind of starting our program to roll that out. Obviously, wanting to make sure the process, procedures, the rocks, the system, everything's built and ready to go behind the scenes.
I don't know. What about Keystone attorneys?
Maybe so.
Right? The Keystone that keeps it all together.
I like that, and there's really, there's a lot of stuff starting out where, this doors are starting to be open, and particularly in estate planning, if you're under the tax threshold, and of course it depends on the state, whether there's a state tax or death tax or whatnot, but if you're under the federal threshold, and of course where we're practicing right now, we don't have at the state level. That federal threshold's pretty high, right? We're $15 million a person, $30 million a couple.
For a couple,
I would say 95% of our clientele, that's not these folks, right? And so there's actually, it's fairly a simple estate planning, but really timing is everything. And then crafting a plan that's going to work when you need it is everything too. Like, what really happens is these folks will go see an attorney and just check it off their box, file it away somewhere. Their assets change, things change. They don't get their stuff, their beneficiary designations right. Nothing's set up correct. And so it doesn't work when they need it to.
Yeah. How many, so let me say this, because we're running up into a break, and we have to, our great sponsors for this show, we have to pay for the show, Webb. It's just what it is. So, but what I want to do is say this, like, when you come back, I want you to tell us how many ex-wives, right, are left as the beneficiaries on the breadth of your experience. When we come back, it's Basma on Business. Welcome back to Basma on Business. Your host, Mike Basma. If you're ingesting this show through KOH or online at kqh.com, I would say if you want the full, more robust version, maybe after the show, go to YouTube and either hit @Basma Business or just type in the search bar Basma on Business. You'll get to us. Go to the show. Like and subscribe. And what we're really encouraging people to do, like this show, what I asked yesterday was, what are your thoughts on having non-attorneys own your law firm? Are there any attorneys out there that have an opinion on this? And we can have a spirited discussion, right? There seems to be a trend that private equity, which is really, well, let me say this, right? And this is the purpose of the YouTube channel, just to be able to have an interaction with our constituency, our loyal listeners, and to be part of the show. I mean, that's really the genesis of it. And then, obviously it's video instead of just audio, but also, KOH, we've been on this station for, I think in March it'll be 14 years, and it's great. And it's just, as technology changes, we're like, hey, we want to give people kind of the behind the scenes access. So the other thing, by going to the YouTube channel, there's an opportunity there to get on our newsletter distribution list. Now, the genesis of the newsletter distribution, that's why you kind of got to go through the steps. People go to YouTube, like and subscribe, right? And all the stuff you need is right there. But then get on our distribution list, because as things are percolating, as they're kind of like last week, you would have been notified, hey, this is the problem. And so I'll just summarize it, right? This is all through our YouTube channel, is that if you don't file a 1099 for your independent contractors, these are the problems, right? You're not going to get a deduction if it's thought about or looked at. That's the easiest way to deny your deduction. Just don't file a simple 1099 NEC 1099 miscellaneous MISC. And we're just trying to give the business owners the skinny on how all this stuff works. The other thing is, if you're tied into that channel, you would have known that the tax season's just getting fired up, and on how to fund your Trump account, right? So if you had a baby, if you had a child in 2025, how to fund that Trump account. Same thing. If you're on that channel, you would have learned, oh, hey, by the way, if you're an employer and you want to give your team a bonus because they're doing a great job, that you could fund their Trump account up to $2,500 tax-free, tax deductible for you, not income for them. The holy grail of tax plan. And the thing is, the show, it comes and it goes. If you miss a show, you miss a segment. This is where the archive is for everything we talk about. It's all broken out in a little snippet, so you don't have to listen for the first 30 minutes to get to a little nugget at the end. We're just trying to make this ingestible, digestible, and really valuable content for our loyal listeners. I got on that soapbox again, Webb. Sorry about that. Get passionate about this. In his studio, Webb Ralston from Arbor Legacy Lawyers, Delore, Hamilton, and Ralston, and a host of other, I love entrepreneurs, So, and a lot of people say this, right? And we're going to talk about kind of what Webb's doing in private equity, kind of building a national brand, that stuff. But the downside, again, Keystone, tax, business brokerage, and wealth advisory. And the problem is, your Webb, what would you say the average attorney makes, during their career? You've been doing it for 15 years. What are you making in the profession? Most normal people, not people in big law that are, working 4,000 hours a year.
It's probably a lot like real estate agents. When you look at that data and you see that come out and you're like 70% of them sell like one house a year, right?
Right.
So, if you take big law out of it, I think you're seeing, these guys make anywhere from, 60 to, 600,000, I know that's kind of a big range, but, at the end of the day, for a lot of them, that's not much money. That's probably, when you're looking at what they've got and the training that they've got and the schooling that they've got and everything into it, it takes a long time to get a return on that.
Right. That's a lot of input. And I would say, to answer my own question, like 200 to 300 grand is where you're going to plateau. It's a great life, right? Very blessed, but you're on the hook. If you commit malpractice beyond your malpractice insurance, it's no bueno for you. So how does private equity enter into the equation, Webb?
Yeah, I think it's probably unavoidable. Right now, if you look at, veterinary, if you look at dental, if you look at some other medical practices, it's high participation of private equity. And so I can't tell you the amount of people that I've talked to recently who've been back to their dentist. Their dentist has since sold. Some of them the same person's in the building, but all of a sudden they go back and they've never had cavities and now they had 5. I think there's a big consensus split between these alternative business structures is a way to fix a broken system, and then those that also see this as a death to the profession. And really kind of depends on your mindset. I take the more, pro innovation view to it. I think it brings costs down, right? What we're seeing with AI and technology, that will drive costs down. It will make legal services more affordable and accessible to the people that currently can't afford them and that are out of reach, right? We're not like, we're not wizards, there's practicality to this. We're not magicians, right? I think, efficiency in tech, lawyers are traditionally not great business people, kind of like doctors. I'm not saying that that's a generalization, but, people outside of lawyers bring new skill sets. Like they can analyze data and process automations and, I think you're going to see the death to this billable hour. How do you bill for an hour if AI is doing the research for you in 30 seconds, right? Like that's, and so I think there's a lot on the pro innovation view. There's a ton that's coming that I think will really, really do great things. And the other thing is like, it's cyclical too. Like go back to Sears. What could you get at Sears? You could get your tires at Sears. You could get your photos done at Sears. You get everything at Sears, right? And so like this fear that everything's going to come back into one thing. We already have that. That's Amazon, right? It's just it's just wrapped in different clothing. And so then the other side is the traditionalist, right? And just saying, hey, there's big ethical concerns, and there are with private equity coming in, right? Will that oppress your attorney to settle early or to cut corners or maybe to, look at healthcare. Perhaps private equity is now kind of having a moment that maybe this is not the best thing for them to be in, or there needs to be some type of guardrails. But it really depends. You got kind of really those two opposing views of it, and I'm of the former.
And so how do you see yourself scaling? Because it sounds like are you going to be the private equity, or are you going to be the attorney that gets consumed by private equity?
Yeah, I mean, I think it's the attorney really that gets consumed by private equity. I mean, they're still veterinarians and they're still dentists, right? Like at the end of the day, I'm still an attorney. It's just, in what area are we operating in? I would rather be the business owner that gets consumed by private equity than the attorney, of course, that's working for private equity.
Right. No, I get it. So, yeah, and that's where what I'd like to do. I get Webb Ralston from Arbor Legacy Lawyers and talk about Webb. We just met, so you don't know me, but I mean, so Keystone, we're 5 years old. In the last 5 years, we've done transaction advisory on a little over 80 transactions. So we see a ton of deals. One of the things, in fact, if for our listeners, if you've looked at those, we have Brian Cassidy. He's a business broker with our firm. He talks about his own journey going from being a business owner that sold to seeing kind of what we do and how we do it on the other side, and why this is a good deal. When we come back, what I want to talk about is some of the nuances of how, as professionals, we're targeted for tax law to be very inefficient in tax land, and why it may make sense to make a buck or two in capital rather than through the sweat of your brow. When we come back, it's Bosma on Business. Welcome back to Bosma on Business. Your host, Mike Bosma, talking about capital infusions for the benefit of, in this case, the legal industry. As a CPA, there's been significant capital infused to various CPA firms through private equity. I'd say, if I were to summarize private equity, it's really akin to using somebody else's capital rather than the entrepreneur's capital. And if you infuse capital, you're expecting a return. So if you want to get some of these nuances, I think that's where for the benefit of our KOH listeners, that YouTube channel at Bosma Business, or search Bosma on Business on YouTube. If you have other platforms that you're trying to get through, we're on Facebook, LinkedIn, Twitter, Kitty Chat, TikTok, Tickety Talk. That's what when my teenage daughter is out doing her little dance things, I was like, "What are you doing?" I'm doing my TikTok. Like, okay, now people get content through TikTok. Who knew I'd ever be on TikTok? But it's anyway you want to get this is out there, primary channel YouTube. And I think one of the things that we're really trying to do is move the needle nationally on how all this stuff works. And I got Webb Ralston from Arbor Legacy Lawyers. And Webb, the thing that drives me nuts, right? So I started learning. I mean, we started, I think we're up to almost 1,500 subscribers on the channel. We've been doing this for 5 months, which I guess is quite a thing. I mean, we're very blessed, right? We have a great following, but I guess the holy grail is, our next milestone is going to be to get to 2,500 subscribers. And then there'll be some love that goes out to the people that are currently subscribed. But the thing that drives me nuts, I want to get your opinion on, and then we'll kind of continue that discussion, is I see people on YouTube all the time, and I won't call them out, but you know who they are. They're these influencers giving tax advice, and it drives me absolutely crazy because they all, in fact, I would say they follow this show. So, which I thought I appreciated, but they're doing it to get content. So then, like, as soon as I had one of these influencers, I put a post on her webpage or on her YouTube, like, "Hey, the Trump account. All you got to do is, like, this is how it works. Give a link, just give me credit for it, right?" And so the next day, "Oh, you got my Trump account, $1,000. No credit back, no credit to Bosma." It's like, I teed that up for you. But the problem is they give bad advice, right? And so a lot of these people, they're out there saying, "You can write off your Rolls Royce and take a 179 expensive." No, you can't. No, you can't, people. Do not listen. If they are not an attorney, if they are not a CPA, if they're not an enrolled agent, do not listen to them. Okay? They're well-intentioned and they're pretty cute as a button, right? Articulate, good graphics. They don't have the foamy, buzzy background in the back because I'm a cheap CPA. That's how you know it's quality content. Bad background. But it's just fact check it because it doesn't work. Don't go buy your Rolls Royce and say, "Hey, I've saved $500,000. But it doesn't work that way, Turbo." Okay, so there's rules. Professionals know the rules. Speaking of professionals know the rules, as I mentioned, Webb Ralston, Arbor Legacy Lawyers, got on that soapbox again. I'm animated today. I'm feeling it. You sound a little lethargic here in the morning. Anyway, so Webb, we're talking about growing, scaling your business, and the capital part of how expensive it is to grow and scale a firm to any size, right? And the bane of our existence is the receivables, the upset client that doesn't pay the bill. We didn't do it. So where do you see the future of your firm moving forward?
Yeah, and I just to take a step back, as far as the influencers and the noise and all that kind of stuff, I think it's important just to keep in mind, how they're being rewarded. It used to be back in the day, the more money you threw at Instagram and Facebook, the more reach you got. Now it's attention. So what you're finding is it's shock value, right? So they're putting out this ridiculous stuff to get some kind of shock value. And the other thing is it's generalized, right? None of
Right.
our planning, just like none of your planning is generalized, right? It's very specific to the particular individual and their plan and all that kind of stuff. And so I think you get a combination of both of those things, but it does give us the opportunity to set the record straight. And if anything, people are seeing these people make these outrageous claims, and if anything, it drives back, well, hey, maybe I need to talk to a professional,
Right.
right? And so I think that's kind of, in the attorney business, when we see other people doing kind of sloppy work or giving bad advice, we get a lot of people coming in right now that they're just printing these things off of AI, their wills
Right.
and their estate planning. And yeah, maybe it gets them 70% of the way there, but the devil's in the details. Well, if you don't execute it right, it has no weight, whatsoever. And so I think it's kind of creating more work for us to an extent, and it's definitely, rapidly changing. I'm a little bit different. I recommend people, I tell the folks that, use AI. It'll get you 70% of the way there. You still
Mhm.
need to, you still need to run it. You still need to work with an attorney. You still need to work with a professional, and
Right.
it's not really for everything, right?
Well,
It's not.
right. Well, and you were talking, Webb, right? Because not all professionals created equal. That's the other sticky wicket, right? So, and I would say that definitely is true in CPA land. So, in fact, I would say it's fascinating as we've scaled. So, we're at 35 folks now, and we're looking to, so I think we just closed 2025, 7.4 million in rev. We have a trajectory to get us 20 million. And so it's just through that, getting quality people, doing quality work, and it's interesting on the client acquisition piece of it. There's such a need for quality accounting work, and that's if you want to go to Deloitte, they're quality accountants, and you bring your small business to them, and they're going to not have any idea what you're talking about because they only do Fortune 500 stuff, right? They're like, you only make $1 million? I don't know how to help you. Like I'm used to working with people who make billions, right? God bless them. So, but that's where it's like I call it the forgotten few, the mist in the middle. Got revenue from 2 million to 20 million, got an enterprise value 2 million to 20 million. They need some help. They need some sophisticated help, but they're not quite to the top 10 accounting firms yet. They don't have that kind of problem. And nobody knows how to help these people. So we're just like, the CPAs to the forgotten few, 2 to 20. And which is probably you. Well, now I think about it, just counting up your businesses on my hand. So, and I think to be able to and like you said, you vet people, right? You make sure that they have a foundation that you call an Arbor legacy lawyer, and that means something. The same thing we're doing, saying if you're a Keystone CPA, that means something is from a quality perspective. Doesn't matter if you're talking to Bosma, you're talking to Weaver, you're talking to Adams, anybody that's been in and been vetted, they know their stuff. And then we use, essentially, you talk about AI, we use AI on the background to say, okay, and and think of it this way, right? If you're expecting your CPA, and now that it's tax season, you're expecting your CPA or your attorney, right, to try and figure all the stuff that they need to do for you, and they don't have the firm behind them. Like what we do is we regularly scrub, anybody that's in that revenue band, 2 to 20 million rev in their business, and we can do some analytics over the entirety of the firm, 1,500 clients, and okay, hey, who's missing out on that qualified business income deduction? Who's underpaid compensation now they're not at risk? I mean, you can do this and then send it to those principals, those partners, to say, hey, look at this, make sure they're okay, right? And so it's not just leaning on your one person. We're trying to build an infrastructure behind it. And I think when we do that, so Webb, the reason I teed that up is what I want to know from you is how big do you grow the firm, and how does it change in valuation when you get cashed out?
Yeah, that's a great question. And just to give you some background there is I did it all wrong, in the beginning. You don't, as an entrepreneur, you don't really focus on tax. That's not why you start into it, right?
Right.
And so before I knew it, I had over 20 LLCs. Some were set up with S corp designation, some weren't. Some of them the elections were made, some of them weren't. Nothing was strategic. Paying myself a high salary, not taking the deductions that I should have been doing. Ended up getting hit with, 3-4 years of 6-figure plus tax bills as a result of that. And then, what do? A massive knee jerk reaction. Like, what the heck am I doing? Like, on paper, it shows I'm making all this money and I'm not, and right.
Right.
And so just to take a step back, I mean, I would recommend for any entrepreneur listening to this, you got the good idea and you've been through proof of concept and it's starting to get going, get that advice on the front end. It will save everything. And it's not just finding like a CPA, right? Like, you need tax planning. You need to be able to talk to your CPA or your tax planner about business and your specific business, what you're doing, how you're setting it up. I've had an interest in a brewery before, right, where there's R&D credits, and those are like a huge thing. But like, you don't know what you don't know, and you're not going into business unless you're a CPA to be, or now private equity to be in tax, right? And
Right.
so like, rely on those people, huge. And then as far as scaling, yeah, I mean, that would have been an extra, several $100,000 in my pocket that I could have
Right.
invested back
Capital
into the
into the
business.
right.
That's exactly right. And so, now we use the entrepreneurial operating system. We have rocks and we have goals, and we talk about, what we're going to hit this year and next month and budgets. And it's much different than when we have scope of works. We have process and procedures. Like, you need all that stuff. Like, get through your proof of concept, and then you got to get all that stuff in place right away, rather than, what we did was like, we're just growing and this is great and new business is coming in, but the foundation wasn't tended to. And so then it gets so big that you're just forced to deal with it, and it could be painful in the form of
when you're
tax bills.
when you're dealing with those growth pains, when you're big, when you're larger, it's exponentially harder, because now it's like you're a bigger ship. It's hard to turn that big ship. The other thing that I would add on to what you said, Webb, a great counsel is, when you talk to your CPA, if you're interviewing CPAs, just simply ask them, right? Say, how many tax returns do you do? How big is your firm? And what's the average revenue of your average client? And I would tell you 90% of CPAs don't know the answer to that. Okay. And I would say, and if they do, right, then they're like our firm. They're like, no, we know we have this, again, 2 million, 20 million. There's nobody else on the planet that can help serve those clients than we can. That's our mantra. That's our marching orders. But if you're $100,000, you have a pizza place and you're making 100, 200 grand in revenue and maybe 40, 50 grand in profits, you don't need us. Now, if you're thinking of scaling to have 5 of those, now that's just a different need, different ask. Like, you're right in our wheelhouse. But ask your CPA, like right now, as we're doing, everybody should be thinking about who's going to do their tax compliance this year for 2025, and just simply ask, like, what's your perfect client? Right? How many of them do you have? How much team do you have? What's the size of your firm? Right? Because it's like, you want to have that baby, you don't want it too big or too small. You want it just right? The 3 bears. And you just like, and once you fit that, and then like, we understand as companies are scaling, they're going to outgrow us, and we're good, right? We'll just let them kind of go merrily along their way. Now, Webb, I asked you this. I want to make sure we get to it. How many ex-wives have inherited their ex-husband stuff because they didn't update their trust? Have you seen it?
I've seen it, and I see it far too often. Again, it's just something that people don't think about. Sometimes if the divorce is bitter enough, then that's the first thing that they do. They're changing over those beneficiary designations and just boom, boom, boom. A lot of the times it's not. And, I even see it too on folks that don't become divorced, or maybe one of them passes away but had kids from a prior marriage, right? And then the surviving spouse basically gets everything, and the kids are like, whoa, hold on, what's going on, right? And so that happens a ton. It happens all the time, and that kind of goes back to what we talked about, is like, people check the box, they assume they got the documents and everything's good to go, when in reality that couldn't be further from the truth. And so it's really important that you have a relationship, and you're looking at your plan on an annual, or at least some big life events happen, to make sure that it is going to be useful for you when you need it.
Right. Well, and that's where, how often should somebody be updating their trust?
You need to be looking at it, at minimum every 3 years, and at minimum upon major life events. So birth, death, divorce, business formations, business sellings, that kind of stuff. And certain trusts, like you mentioned, like your revocable trust, like there is, deadlines that you have to have assets in them, for so long before, basically they're effective, right? So, planning is really everything in our world as it is in yours too.
Yep. No, and I think that's a good way to put it. I got Webb Ralston from Arbor Legacy Lawyers. When he comes back, he's going to give us the number one thing you need to do regarding your estate plan before you end this show. It's Bosma on Business. Welcome back to Bosma on Business. Your host, Mike Bosma, in his studio, Webb Ralston from Arbor Legacy Lawyers. I'm curious, Webb, when before we get to that number one thing, if somebody wants to get a hold of you, how do they do that?
Yeah, you can go to arborlegacylawyers.com and you can reach us that way.
arborlegacylawyers.com and set up a consult, see if they can help you. And that's where it is interesting, Webb, when you were like, I just reimagined your entire business. Like, why don't you why isn't Nevada doing Nevada Trust? Is it South Dakota? South Dakota, the two, for irrevocable trust, kind of like these two great places to have trust.
That's right. Yeah, that's right. LLCs up in Wyoming, Cook Islands down. That's a popular trust thing that you see on Instagram, and it really it depends on your goals, right? I'll get this stuff from Instagram all the time, and somebody said, I need this special Nevada trust. And it's like, well, you don't actually even need an irrevocable trust altogether. You're just trying to avoid probate, right? Like, come back to me when you have these assets that we really need to protect, right? And so again, it's not a one size fits all, but yeah, Nevada, great trust laws.
Right. So we always leave our listeners with the number one thing. So, Webb, you see people make every mistake, not update their trust, have their beneficiary designations not updated in their trust so that it could potentially go to the ex-wife when you die or ex-husband when you die. What's the number one thing that our listeners should take away from what they need to think about their estate?
Estate planning, especially for business owners and your listeners, it's a pregame activity. It's not a postgame one. So if you're waiting till the end, to start planning, you've already lost, right? And so get started early, review it often. That's my advice.
Yeah, start early, review often. But the other thing I would say is this. One of the things I think is often missed with business owners specifically, and attorneys particularly, CPAs particularly, doctors particularly, right, is they work their entire careers to have this nest egg. And the idea, our wealth advisor part of the business would say, you're exchanging your chosen vocation, your profession, all that knowledge, you're going to charge for it, make good money, very blessed, but then you're going to invest it in stuff, real estate, other businesses, stocks, bonds, retirement. And you want to make sure that that's safe so that if heaven forbid something happens to you, right? I had a good friend of mine. He was a professional like myself. He had a partner, and he thought he had hired a law firm to have all these protections so that he was a founder, majority owner, and sure as shooting, the minority partner, the little devil, he reimagined that partnership agreement and fired and then took the 55% owner stuff. Terrible, terrible, terrible. And then it went after him for everything he'd amassed over the entirety of his life and won. And that would have all been avoided had he had that in an irrevocable trust and had properly seasoned, right? And he had no idea that would come. I mean, he's a professional, doing his work, honest as the day is long, smart, everything right. And then because his attorney really did, I think it was between an and a comma or something crazy, right? And they're like, no, okay, we'll get this fixed out. Go to court, sue, $6 million in litigation fees later, right? He ends up on the wrong side of that. I'm like, I couldn't imagine. I write a documentary on it, and I'm like, well, it's unfortunate you didn't have all your stuff tied, So those are the things, right, that you do. Like you said, Webb, you're spot on. You have to do it soon. Once you're in the middle of it, it's too late. Sorry. And I will tell you this, the estate exemption is, yes, it is $15 million per person to 30. That doesn't mean it's going to be that way forever. And I would encourage you, the next administration has a different opinion on all of the above. So why keep it in your estate? Why have it subject to creditors if you don't need to? Anyway, Webb, thank you so much for coming and sharing your journey. You can go to arborlegacylawyers.com if you need some of his sage advice and help. Of course, I would encourage you, please like and subscribe to the YouTube channel at Bosma Business, or search Bosma Business on YouTube. But then also engage. I'm just begging you, engage. If you have a question, you have a thought, you have a need, we'll keep it all anonymous, right? And so that way you can kind of bring your problem forward. We're going to help you riddle it. That's what we do with our free 1-hour consultations. Until next week, Webb, thank you so much for hanging out. If you have something newsworthy, come on back. Until next week, my brothers, my sisters, keep that business engine humming. It's Bosma on Business.